All right, all right. Welcome, everybody. We will let you all get comfortable, get into your positions here, if you will, as people are joining. So we won't dive into the content just yet or introductions just yet. We'll let you all get comfortable and get going here in about 60 to 90 seconds. I got a great group, got a great discussion going on. You can see some of the faces on screen, which we'll introduce in just a moment. One of our other panelists, we'll see if she can make it. I don't know, Tim or Wendy, if you guys are in an area right now, there's a lot of weird weather going on in the country. Are you guys in one of those areas?
Absolutely. In San Diego, we've had rolling blackouts, and now apparently there's a hurricane coming up from Mexico that we're going to get some rain and humidity. So Suha's in Florida right now with thunderstorms and humidity, and it feels like that here. Tim, you're about an hour north of me. What do you think?
Yeah, I'm up in Orange County. We're actually looking forward to the hurricane. It's going to cool that weather down.
All right.
100-degree weather for the last couple of weeks. It's been fun. Lots of cold though.
We got everyone, please quote Tim. I'm looking forward to the hurricanes. That is not something you typically hear. But yeah, we do need to cool down.
Absolutely.
Oh, you got Wendy, you're getting a call out from Chris.
Yeah. Chris Bush, my man.
So while we're using chat, and we're going to encourage everyone using chat, I'm going to say where I am from. You already did, but I'm in Boulder. And we're actually we are getting here, and I've only been here for 7 months, but the people that live here are telling me that this is a pretty hot like moment in time because it's over 100 degrees and it's towards the end of, we're in September now, and they're like usually starting to cool off, and we've had 2 or 3 days of over 100.
Absolutely.
You got somebody agreeing with you, Tim?
Yep.
All right, everybody, we're going to go ahead and start kicking things off. Thank you for joining us. Let me start to share my screen here, and we're going to get this thing rolling. So you guys are joining us once again, another worthwhile webinar. Have an amazing conversation today, all right? Be a financial family friend. You guys see me wearing the shirt, financial friend. In the lending space, in the financial industry, we should be looking to be the financial friend to our customer, right? Not just one that does a transaction, but one that actually listens, understands. You're going to hear us talk about slowing down a little bit here today. So how do you become that financial family friend, and using digital strategies to find all the different equity opportunities and making that a benefit to the consumer, and making it something that they know you're doing it for them so they can trust you. So very important. Some key takeaways. Again, every time we do one of these events, we want to make sure that you guys know why you joined and what to listen for, right? It's very important. It's like, before you go and see a movie, you see a trailer and you decide if you want to see that movie. That's the key takeaways is the trailer, right? And so you want to look for those things in the movie and make sure that you're getting these out of it. So take a look at those takeaways. We're going to keep coming back to them. And of course, everyone on the call, you guys know that we're looking to raise with worthwhile webinars. It's fundraising, it's education, but also giving back. And today we're giving back to an amazing cause, which we'll go over in just a second. But let me introduce our amazing panel here. You can see we're missing a couple folks. My name is Alex. I'm the co-founder and chief visionary officer of Sales Boomerang Mortgage Coach. Dave Savage, my business partner, couldn't make it today. He's in flight. His flight has changed. He was at an event, and he had to change his travel, so he couldn't be here today. But we do have Tim Nguyen from BeSmartee. Thank you for joining us, Tim.
Thanks, Alex.
And of course, we have Wendy Peel, who's the managing director and partner at Reverse Mortgage Practice for BlackFin Group. Thank you for joining us, Wendy.
Thank you, Alex. I'm excited to be here with you guys. Very excited.
And we wish Suha could be here, but she is experiencing some of this strange weather that's going on, and she keeps getting internet in and out and electricity in and out. And so we told her, join us if you can, but obviously no pressure. Look, we're here. And the group we've chosen to donate the money to today is United Help Ukraine, an amazing organization that has been established for since 2014, but is really It has a big focus based on the war that's going on there right now. And we've all been giving back. I'm sure everybody on the call has done something towards it, knows somebody, some kind of impact from this. And so we're raising money towards this. And while you are on this call, if you haven't donated yet and you're inspired through this conversation, go ahead and donate. As you know, we're going to be matching donations and giving as much to this cause as possible. So let's jump into this. Unless Wendy or Tim, you have anything to say about the cause, let's jump into the conversation.
I'm just thrilled to be a part of this and doing something worthwhile. I love what you guys are doing here, giving back. I love the concept. I appreciate what Sales Boomerang Mortgage Coach, what you guys are doing here. So thank you very much.
Yeah, ditto to what Wendy said. This should be the new standard for webinars across the space. Our industry, other industries, we can use that power of business, give back, and really help others in much dire need than we are.
Thanks, Tim. Yeah, it's interesting because that's exactly why we decided to start doing this. We're getting all these people together. Why don't we give some money towards some causes while we're at it? And so I'm so glad it's catching on. And it's interesting because our first worthwhile webinar, when we were asking for donations, only got like 14, 15 people. And this time we had over 160 people register. And so it's amazing to see that this concept is starting to evolve. So thank you for that feedback. All right, so what are the opportunities to help borrowers right now? You can see the list: purchase, retirement, life events, referral partners. These are all the different ways that we can be helping our borrowers. But today we're going to focus on retirement. And really, you're going to hear some amazing information from Wendy and from Tim, and I'm going to be adding a lot of insight as well. But it is focused on retirement and that planning for the future. And remember, to plan for the future means somebody has to believe you today in the present. So if they don't believe you and don't trust you, it doesn't matter what you're sharing with them. It's not going to work out because they're not going to believe what you're saying. And so you have to be honest, transparent, and create that transparency in the relationship. So we're going to talk about those things, but let's start with a big question. This is important. This is going to set the tone for this conversation, and you're going to see other poll questions, and we're going to really unpack some hard-hitting questions in a minute. So here's the first poll question, and we really like to start with a poll so we know you're engaged and you're looking at the screen and you're here with us. So, do you or someone you know provide financial support or caregiving to a family member, right? So again, if you're looking at another screen or being distracted, let me again just reread this. Do you or someone you know provide financial support or caregiving services to an elderly family member? And then Wendy, once we get these results, I'd love for you to kind of unpack what that means, and then we'll jump into the next phase of this conversation. So let's give it 30 seconds. Are you or someone you know giving some care to an elderly family member? This is key because it happens a lot, doesn't it, Wendy?
It does. There's studies out there right now that are showing the sandwich generation, which literally the millennials are not only paying, maybe a few hundred a month to help out their parents, they're also helping out their kids in their 20s with what's happened over the last few years with job changes, COVID. Everything has kind of changed a little bit the last few years. And you're even seeing a trend towards multi-generational inside the family home, because the uncertainty is really there, which is sort of interesting when you think about, and I love to say this because it gets people thinking, the greatest wealth transfer in the history of the world is ongoing right now. Between the boomers and the greatest generation passing over that Generation X to the millennials. Yet we're in this really murky area where there's not quite enough services to maybe help either side. So it's a really interesting time.
Yeah, I love that. And that's exact your insight and everyone that's on the call. Wendy has this amazing access to information from the years that she's been spending in this space. And just as you listen to her speak, these facts and these insights they are jaw-dropping in some cases. And so excited to get into that. Let's see the results of this poll, Nicole. Let's see how many are yeses and how many are nos. Okay, look at that. So more than half, over 60% yes. Wendy, is that a surprise for you, or were you expecting this?
Not a surprise. It's right on par with what's going on in America right now. The people here are right on par. And this is, I think, something that is super telling. So we know that more than half of the people in America.
Do you want me to go this slide, Wendy, or
Yeah,
stay
no,
here?
go ahead and go to the next slide, because I think this is teeing up where we are in America right now, is that we've got Suha,
We got Suha.
out of the thunderstorm
Good.
joining us. Yeah.
Made
Suha
it.
actually did some work with me on pulling the 2020 HMDA data. And if you take a look at simple loan applications, 46% that were denied, and we take that chunk over and we analyze that, it's astounding to me that more than 70% of the people are in the demographic we're talking about that were denied a loan. And why would they be denied? I mean, what were they looking for? So let's go back. What were they looking for if they were trying to have a loan application? Probably refinance, maybe purchase, but for the intent of lowering their monthly payment, most likely in retirement, or trying to get rid of a monthly payment, and
Right.
access home equity to what? Maybe paid for healthcare that's gone up 25% over the last 5 years. Long-term care. There's so many reasons. And this group of people who we know have access to $11 trillion in home equity right now. $11 trillion in home equity.
11 trillion. That's a lot of money.
Market. In this market, yet they're denied a loan. And the sandwich generation is helping. I mean, we've got some problems in the retirement of America. I mean, Secretary Fudge just announced that the age in place, they're donating money, or they're not donating money, they're giving money to study age in place. People on age in place. That's our money that they're giving to age in place. But there's never been more talk about what's happening in retirement, and equity is one of many topics that we can talk about on helping solve this problem.
So let's get into some of these facts again, because guys, at the end of this call or throughout this conversation, we're going to be talking about what you can be doing to help people understand their equity, their options, and how to use certain products and conversations to inspire new thinking, trustworthy thinking. So let's get into some of these facts. We don't need to get into all. It's a lot of words on this page, but Wendy can highlight and pinpoint what's really, really important here. Wendy, before you go, Suha, hi.
Hello, how's everybody? I'm so sorry I was late. As Wendy said, we are having severe thunderstorms in Tampa.
No, you're all right. We're happy you're here and that you could have made it and that you have electricity. And so appreciate you being here and stay safe there. All right, Wendy.
Absolutely. You know, it's no secret that there's a shortage of wealth at the retirement level. On average, people only have, you know, about, I don't know, $30,000 to $50,000 that they literally have in their savings account. Now, what I don't like about some of these stats, and this is where I'm completely being transparent here, is we all know data can be skewed. So you really need to pay attention to your local community. Where you are matters. Mm-hmm. And I stress that because, you know, if I'm in San Diego, somebody might have $500,000 of home equity to tap. If I'm in somewhere like Oklahoma, you might not. And so I really stress, know who you're talking to and what they do. And this goes back to what we've talked about with conversations, Alex, like slow down, like
yes,
talk to the folks out there. You know, I think that the number one things that people are talking about since I was a kid was Social Security. Will it be here and for how long? That's been a topic forever. The average age of retirement has had to go up. You know, it's 66, but Americans live until they're 78 years old. And, you know, what are we going to do with that gap? There's just so many conversations to have. And we really and truly have an opportunity to help in America by talking. You don't have to get a reverse mortgage or anything with your equity, but you need to be talking to people about what their future looks like way before they need it. I mean, I think that there's a slide here, Alex, you're going to talk about where,
This one?
yeah, go ahead. We can go into this one. Like if we break it down to simple math, on average, retirement monthly is $1,600. That's on average, right? On average, there's $290,000 in a type of retirement savings, which is about $1,000 a month if you're the withdrawal rate is 4% a year. So that's your simple income. Now, most people don't think boomers have debt or have mortgages, and that's just not the case. About close to $200,000 is in mortgage. And then there's other debt, household debt. That's not even talking about insurance and things like that. They're yeah, go ahead.
Isn't it interesting, Wendy? And I know Tim has some good questions here because we had prepped for these calls. Isn't it interesting? And this is for everyone on the call. Isn't it interesting that in our industry, we speak so often about wealth is created through real estate, right? And that's how most wealth is created. And then we look at boomers who are still in debt from the real estate. And so that has a lot to do with the advice that you've given to your customer in the mortgages that they choose and what they do with it over time. And so we're going to get into how to give the best advice and how to make it non-biased so people actually believe you, because sometimes you're giving great advice, but they've had terrible experiences. They don't trust you. They go somewhere else, someone they may know a little better. They're getting worse advice there than you gave them, and they go with somebody that's not giving them the best solution. And so it is like, how do I give this advice? How do I make them believe me? And we're going to get into that. And so let's keep going, because this, to me, when I saw this, Wendy, it blew my mind, because I did think that boomers are kind of out of debt by this time, but it's not even close to true.
Yeah, Wendy, I have a question.
Absolutely.
So, when we look at the average boomer, right, has mortgage debt, they're doing a draw, it's not a significant number. Does that mean then that they're going negative every single month into their older ages? I mean, what's their mindset like? That's a scary proposition if I was in that.
Yeah, it is scary. And what you're seeing is people started working longer into their lives. They're not retiring when they typically wanted to. And we've seen the effect of that in our own economy. So you have people getting out of college, the jobs aren't, we can take this into the job market now, right? Jobs haven't been necessarily available, the higher paying jobs, because they can't afford to retire. So, we've got to transition society in a more natural way. And I always say, and I heard this about 6 or 7 years ago from a financial planner, the reason that people have Social Security and have home equity is literally because you're forced to pay each of them. Social Security, they're taking it out of your paycheck, and you are going to pay your taxes. So you have Social Security. And for the most part, people pay their mortgages. So they're forced to pay into the principal for the most part. Everything else is discretionary. And, it's not really anybody's fault. It's a sign of what's happened in society. And I can totally geek out at times, and I laugh about how geeky I can get in these stats. But if you go back to the 60s, more than 60% of the people, and I'm just talking this right now, more than 60% of the people out there had a pension. And pensions handled a lot of times healthcare, the guaranteed income, so you could retire. And that depleted. Right now, there's fewer than, I think, 10% of the people that have a pension. And we had this gap. In 1978 is when 401ks became more mainstream by the government. So you have this gap where people really didn't have an option to necessarily save. And, if I go back to the compound interest, a penny a day doubled, you've got about 10 to 12 years there where folks did not get that compound interest, and they're here now retiring. So when you think of the math, it's not their fault. It's not people's fault. They didn't mean to get in this situation,
It all goes back to financial education, I think, Wendy. And it goes, if you ask somebody young, what is a pension? They probably don't even know what that is, really. Right? If you ask somebody who's just coming out of college, they have no idea what is a pension. So, and a lot of them don't start saving and planning for their 401k as when they come out of college, and they don't start doing that until they're in their 30s and their 40s, not realizing how important it is. And this is where you come back to being a trusted advisor, helping somebody so that you are showing them what they need to do to prepare. I know we have a slide coming up about the 30-year mortgage,
Yeah.
so I don't want to jump to that, but
Well, let's do that.
what happens when you get to year 29 in a 30-year mortgage?
This is so important. Like, I'm gonna share my screen a little differently in just a second. So I'm gonna stop this. I want everyone to let this message sink in. Okay, you're on this call. You're in the lending space. You sell 30-year mortgages all the time. How many of you are talking about what to expect in year 29? Think about that for a second. It came up in the conversation. I was like, oh my goodness, I don't think I've heard anyone mention this. Everyone is talking about lock this in, let's get your payment to this thing, but no one is talking about what to expect in year 29. And so it is such a shocking thought, to be honest. Like, how are we not talking about that, right? And so in chat, everybody, that thought of, am I talking to my customer about what's happening in year 29? That's got to be blowing your mind, right? Like, have you had that conversation? And so we want to show you, right? It's very important when you say, hey, how do I have this conversation? And we're talking about education. And Suha, beautiful setup on it is about education. And when you talk about trusted advisors, that special word in the beginning that starts with the letter T, trusted, right? Because that's what this industry has been sort of having a challenge with, is being trusted. And this isn't Alex talking. We ran an analysis and found out of, I think, 14 top industries in the United States, mortgage industry was at the bottom below car salespeople. I'm just saying, okay? That it's so true.
That's
it's
awful.
exactly where we ended up. And that's got to change. And I think we're below the car salespeople because our loan amounts, what you're spending with this industry is in the 100,000s and up, and the car industry is a little less. So I think if they were higher priced, they would have been up higher, right? So it's about trust. And so how do you create that? I want to show you guys something very interesting, that when we're talking about creating trust, there is a great study, and I did not find the link to it because even if I did, I think it would take a long time to go through it, but I'm going to share it with you guys here. I'm going to share the screen, and this is about building trust. What you're about to see is about building trust. This was in the 90s. This study was done where they took two people. You all, if you've heard of this study, give me a thumbs up. They took two people, they put $10 on the table, and they said you are going to decide the split, and the other person is going to decide if they accept it, right? So if I'm the one that's deciding the split, I go, all right, $8 for me, $2 for you. You decide if that's fair. And if you say no, nobody gets anything. If you say yes, you get to keep that money. And as you can imagine, as the split started going towards this person making the decision on the amounts, people started to say, people are laughing here. Give me the thumbs up if you get it. You started to see the percentage of acceptance go way down, like 10, 15%, 20%. And so they threw a twist in it. They said, what if a computer decides what you get to keep? And the acceptance was over 90% no matter what the level was. It was incredible. And so, why do I bring this up? We're talking about trust. This is why I bring this up. You have to be able to talk. We used year 29 as an example, right? Year 29 is just a way to make a point. It's a metaphor, right? To make a point. Here is a digital presentation, okay? Which, in my opinion, a professional originator, any lender that wants to create an experience and a relationship with their customer can no longer give fee sheets and just talk to people on the phone. Hey, write this number down. Remember this. It doesn't work because what happens in year 29? How do you trust me? This is how you trust me. Mr. and Mrs. Borrower, don't listen to what I have to say. Here's the information. And everyone on this call, really quickly, I'm going to ask you a question. I guarantee you'll know the answer in less than a second. Looking at the left side of the screen, which option is the worst? 1 second. All of you got it. I know you all got it because it's the only one in red. It's the only one in red. And guess what? Alex didn't say anything. I didn't tell you to look there. You knew where to look, okay? So, first of all, this is taking a digital presentation that's based on some computing functions to allow you to separate yourself from the decision and only offer advice. and advice based on information that you've collected from the consumer and based on what's happening in the market and what you can offer. But let's go to that 29th year concept. How can you tell somebody what they're going to experience over a course of, in this case, we're showing 10 years. And so option number 3, again, if I asked you all very quickly, choose the one that's the best, you don't have to have a master's degree in anything, right? You don't have to be a doctor. You can quickly go, oh, the third option seems to be the highest and my net worth is the highest after 10 years with that option. Obviously, that's the best thing for me, if net worth for me is important. And so my whole point here is, Suha, Wendy, what we discussed, it's about creating trust and showing somebody what to expect. And then stepping back, get back, take a minute, right? Does this make sense? Let's take the application. Stop. Stop for a minute. Let them digest this, right? And here's what we found. And then we're going to get right back into the slide deck in a second here. Here's what we found. Decisions after a digital presentation that shows them the future, current state, all of that, get made about 3 times faster. That's 300% faster than whatever you're doing manually right now. Why? We can all guess. I'm informed. I'm in the know. When I don't know, I hesitate. When I know, I move forward. And so this is exactly about that. Let me stop and see if anyone of the group wants to add anything to this.
It's interesting because, you know, you're showing options and you're showing different rates. And when you become a trusted advisor, you're no longer selling a rate. You're no longer talking about the transaction.
Exactly.
You're building that lifelong relationship. You're building a customer for life that is always going to come back to you because they trust you. They're no longer thinking, I want the lowest rate. Because if that's all they want, they're going to jump from lender to lender. They're just going to go whoever's going to give them the lowest rate. And if we pause and think about it, this is buying a house is the biggest transaction that any American, any human is going to undertake. Providing them the data and the information they need to make a decision, the right decision for their family, is so critical. And if all we tell them is, hey, I can get you a 3% and your payment's going to be X, and who cares what's going to happen 5, 10, 30 years down the line, we're not doing that. It's a disservice to the customer. And so
Go ahead.
no, that was it.
I was agreeing with you. Absolutely. You know, buying down rates, the present value of money over time is a concept that can, with technology now, be shown. You don't have to be an economist. You can show people how their money is going to work for them. And, you know, part of the wealth is in real estate. It is in, you know, that's how you build wealth. So not talking about it, I mean, you're almost putting yourself out of the job. If you're not going to talk about it, you're kind of doing this to yourself. And it might sound harsh, but that's the reality. I mean, you know, Suha says it much more eloquently than I do, as does Alex. But the reality is, if you're not going to think these things through and use the tools, what's going to happen now? It's no longer a refi market where you're just going after the lowest rate.
Right.
Yeah. You know, we talked, oh, go ahead, Suha.
Sorry, I was going to say, and the other side of this is when you're building that trusted relationship, you turn it into a generational impact. You're no longer just helping to finance the parent or the grandparent. It becomes a family. You know, the kids come back to you because they trust you. You create that generational relationship, not just a one-time thing even. And that's when you're thinking long-term.
Exactly.
Sorry, I didn't mean to stop you, Tim.
Go ahead, Tim.
No, great point, Suha. I appreciate that. You know, in our industry, right, there's a lot of automation taking hold of what we do every day. It's originators, processors, back-end office work, et cetera. That time gets freed up, right? The less you have to do. And there's a lot of fear out there that, well, am I automating myself out of a job? You know, I want to make the point clear, right? It's a complete opposite. You're automating yourself into where you're more valuable.
Exactly.
Right. Love that.
Right? And that,
Love that.
You know, if you don't
That's
have
great.
to do 2 hours of work on a particular application, where's that time go? And I think we hit it right on the nose here. Is education. You're the expert, right? I should be able to go to my loan officer, my lending company who gave me hundreds of thousands of dollars.
Mhm.
And if I have a question about it, I should be right back at you. But instead, I'm not. I'm talking to other people who don't know the mortgage industry, who don't understand the way real value and net worth is created. So I just want to make that point, right? It's our responsibility in this industry to really take that trusted advisor role and make it mean something.
And look, it's, you know, it's, I love what you said. It's, and I hope you can you type that quote that you just said in there. It's not automating yourself out of it. So I love that. Let the audience copy that too. But when they go for questions, isn't it wild? We all go online instead of calling our lender. We go, oh, let's find out information. What did somebody write yesterday? They go to a blog. They go to something, right? And it's like, because think about that. Like that's a reflection on the industries not making us trustworthy. And so that's why presentation matters. That's why separating yourself and giving clear value and not saying, you know, one of the things I laugh about all the time, and if there's any agents, realtors on the call, I apologize. One of the things that I laugh about all the time is when somebody's walking me through a house, like an agent, they go, and this is the kitchen. I was like, oh man, I thought this was my bedroom. Thank you for that information. Like, you're not here to tell me that this is a kitchen. Like, I got that. What value can you add? And same thing in a mortgage conversation. What value can you add? When you start talking, well, guess what? The rate is 5.8. Well, I know that. I saw that when I scheduled, this with you. I know, right? It's like, where is the value? The value is in the support, the guidance, the reason. That's where the value is. And that's what's missing. And that's what we're talking about here. So
hey, I'm going to pause for a second, Alex, before you go into this poll, because there's one other golden nugget here, if that's okay. The golden nugget is, if you get very good at talking about wealth, you now can encourage them. Go talk to your financial planner, talk to your accountant, talk to these people that are your trusted advisors, because guess what? You know what you're talking about, and they're going to validate it. Third-party validation is amazing. I mean, go back to when we were kids. My mom would listen to my best friend more than they'd listen to me if we weren't out doing what we weren't supposed to be doing, right? That third-party validation is massive. And that's important right now. And it's going to bring you in referrals, because that financial planner knows you know what you're talking about. So there's a lot to unpack here, but the opportunity is amazing right now if you're leveraging technology. Tim, that was a brilliant quote. I'm going to be stealing that from you.
Look, the idea that you just shared, Wendy, is incorporating, right? What a great idea. Incorporating all the people that could be touching the financial lives of your consumers, of your borrowers, and referring them right back. Hey, remember we talked about this 2 years ago? You said you had a great advisor. You should go talk to them. Or if you don't have one, I have one, right? And doing it regularly. And I love this because Dave Savage says this a lot, being the captain of the wealth team. The reason he says that in the lending space is because what Suha said, this is the biggest transaction, right? And so you are actually helping the largest asset and involve those insurance brokers, involve those accountants. And I love that, Wendy. That's a great point. People need to definitely take a note on that. Go ahead, Tim. I think you had something.
Yeah, Alex, you brought up the irony right in our industry. We're selling a 30-year product, but are we actually talking about future years, right? Irony of the other point you made, I forgot. But here's another irony, right? Is when you think of wealthy people, they have a family office, or they're part of a shared family office. They have trusted advisors. They want to make a stock trade. They want to buy a business. They want to invest money, right? They're picking up the phone. They have someone they can trust. These are the people that need it the least. Okay. Right. Everyone else, the average American, needs it the most, yet they do not have access to this. You are that person.
Oh, so well said.
Put it yourself out there. You're that person. An email rates a year later, a happy birthday email, cool. But bring more to the table, right?
I love this.
Hey, what's your life plan looking a year later after you bought your first home? What's your life plan now that you're 5 years away from retirement? That conversation, that spark, builds trust. It'll build revenue. You'll change and impact lives.
So just
it's
imagine
creating a circle. It's like really creating a circle that just feeds itself.
Exactly.
Just imagine
your CPA's there, right? Your accountant's there. Loan officers, you guys are there as well. You just got to put yourself there.
Look, if Wendy, I'm going to use this stat to really drive a message home to everyone here. Imagine saying to your borrowers, on average, people who do loans somewhere else end up having to be in debt when they're in boomer age, but not my customers. Not my customers. Okay? My customers are
That's
not.
powerful.
That's
Right.
huge.
Powerful.
So that's where you want to position yourself, everyone. Others are going to put you in debt when you're ready to retire. We're going to make sure you have a net worth when you retire. Done. Like that is the goal. All right. So let's get there. Does your business offer sufficient financial education and advisory support for retirees and their families that may be struggling? I think this is a poll. Let's populate this poll and let's see what you guys say. I'm excited to see this one because we know there is a shortage of this, right? Because $28,000 in debt on average for those boomers. So we know there's a lot of advice that's not either bad advice is being given or it's not, or good advice is not being followed. So it's one of those two. But I'd love to
and consumers are, they want what they want and they want what they're used to. And so it's a tricky, I'm not saying that this is easy. It is tricky because when somebody walks in and says, I want to lower my payment, monthly, and I know I can get this rate because back to education, that's all they know what to talk about. It's not easy to pause and have that conversation because, this is your livelihood as well. And you don't want them to, again, back to that reputational risk. This industry had some challenges, and
Right.
It's been a long time since 08, but there's still a little bit of a hangover there. And so it's hard. I'm not saying this is easy. It is a difficult thing, but once you get used to it and you become that trusted advisor, no one else will take your place. No one else will take your place.
You know,
And think
short of
about
all
this.
of us becoming certified financial planners and involve ourselves in the world, right? Where do loan officers start, Wendy? Like what are the tangible things they can do today, right now, to start turn that table and position themselves in a better, maybe it's not the right word, but in the direction, right, of being a trusted advisor?
That's a great point. It depends on what type of loan officer they are, what their, what their infrastructure looks like, where they are. But for the most part, ask what the goal is and why that goal is there. One question, okay, so you want to know why is that?
That's the best question.
Why?
Yes.
I would
mean,
actually take it a step back,
Yeah.
Wendy. I would say
Go for it.
educate yourself as a loan officer so that you can provide the information. Because if you don't know, if all you're coming at is the lowest rate, if that's all you're offering your customers, then you don't have the right knowledge to become a trusted financial advisor for them. And if you think about it, when, I know we're talking about people who may already be in a home and who are getting their equity, but if we take it even farther back to that first-time home buyer who may not be ready, and if they come and talk to you as their loan officer and you help educate them and get them ready so that they can fulfill their goals of why they're buying a house, because they want to have a family, they want to have kids, they want to, build generational wealth, then you can actually help them achieve that. And that turns the entire story because that's where that trust begins, because you help them get to that first goal that they wanted. Remember, every American, I think, goes through 7 or 8 different mortgage transactions. So if you build it from the first time they were a first-time home buyer, they're going to stay with you through all those transactions until they're ready to retire. And that's huge.
That's huge. That's huge. Over the last few years, one of the lenders that I've worked with for a while now, rates have been low, but they actually actively encouraged anyone 62 or older, or actually 60 and older, because there's private mortgage programs out there for reverse. They ran a comparison. So even though somebody might have asked for cash out refi, they positioned a reverse product also with a knowledgeable person.
Oh yeah.
Because and this is what she told the loan officers point blank: if they get in trouble 5 years from now, I won't be able to help them because it matters the age and the value of the home. There's the formula there. I can't help you. I can't help them if you give them a cash out refi. So please let them have a conversation. And that was bold of the company to do, because it wasn't just taking orders, but it's paying dividends right now for that company because they're trusted. The people said, wait a minute, what are you trying to do? You're 60. Do you really want a 30-year fix? Is that really in your long-term financial plan? Well, wait, I have options. There are options. Yes, let's talk about them,
Yes. Yes.
I think Tess brings up a good point here, Alex, we should probably address.
Yeah, we should. Let's address that. You guys saw the results. People are here to learn, so that's fantastic. I'm actually going to take the screen share off to address. What an amazing name, by the way, Test. I don't know if you were born with that name or not, but that's an amazing name. So he's asking, very interestingly, or he or she, I don't even know, is asking very interestingly, hey, we're supposed to stay in our lane. Like, we're doing mortgages. We're not financial advisors. So why should we put this financial advisor hat on when we're just supposed to be a loan officer, right? Where do you guys stand on that concept?
From a compliance and legal perspective, right? I think the organization, the individual loan officers, we should get educated on what that fine line is and not cross it. 100% for sure. We got to stay compliant. But you have the information, right? You have the data. Here's my question back is, and this is going to be for you, Wendy and Suha. If you're looking for helping someone save their home, HUD provides counselors, right, to help you walk through that process and understand what's going to happen, right? If you're looking for, low income communities, et cetera, there's HUD programs as well that'll help you get into homes, their expansion strategy, okay? But what about for everyone else that doesn't fit that mode? Are there government agencies, nonprofits that we should be talking to and working with to move borrowers over there so they can get the expertise that maybe they can't afford, don't have, and we don't want to cross that fine line?
So I'm not legal. So I'm just saying what I believe and what I think, because that's what Alex asked. As a loan officer, you are licensed, and part of your licensing is actually understanding the whole mortgage process and how you can financially help your customers. You understand that, whereas they may not. So putting on that financial advisor, maybe that's, loose terms, becoming a financial advisor, but you're there to guide them through the process. You're licensed to be able to do that. You're licensed to understand what happens in an amortization schedule and what will happen at year 29 and how they can actually build that generational wealth. You have to pass that test to be able to do that. So when you're talking to your customers from that standpoint, that's where you're advising them. You're telling them, if you do a 30-year when you're 50, that may not be in your best interest. At 45, you may want to do a 15. You may not want to do an interest-only loan because you're never going to put any equity into your home. That's where you're bringing the knowledge that you have and the education that you've gotten to the table. That's how you're advising your clients. You're showing them all the different options that they have, and you're telling them, option A, this is what you get. Option B, just like Alex showed in that 3-option scenario that he had. Again, the final decision is obviously the customers, the borrowers, but you're helping show them, you're giving them the facts that is true, and then helping them make that decision. Yeah, I don't know if you have anything else.
Well said.
I think that's a bingo for sure. I think Kathy Pierce there agrees as well. It's not that you have to provide the financial advisory hat, right?
Yeah. You're not telling them invest in this or invest in that or do this with your 401k. That's not what you're doing.
Yeah, it's the uncovering the questions so you can help them dig deeper.
Yeah.
It's to your point, it's their data. They need to understand it, and you're licensed to help them understand it. And I will go back to what I said before. Ask them where have their financial planner validated. If it starts, you're not a financial planner, nor should you be. Have their financial planner validate the data. That's
how to read their debts.
It's a community. Back to what Alex said before, or Tim said, it's a community. People with wealth have a community. If they don't have a community, help them build one. That's value. That's the trusted advisor. That's the value, really.
And what a beautiful concept of taking it back to your financial planner that customer may or may not have, but if they do have them, and you have this validation. Talk about trust that's being created. Think about the power of saying, hey, have your planner check my work, right? I'm open to that. And it's like, how many people would say, you know what? If you're that open to doing it, you look like you believe in what you're talking about here. Let's move forward with this. And so I love the example you gave, Suha, of if you're offering somebody a 30-year mortgage when they're 50, you may not be offering the best advice, you know? And so, and I saw also Jill, her, by the way, test is actually, her name is Jill. So thank you, Jill. And, you know, Jill mentioned also, you know, are you putting their goals into that digital presentation? The answer is yes, absolutely. When you put their goals in, there's a great example, and we can maybe send this with the recording of this video. There's a great recording of a loan officer. They got a notification from Sales Boomerang about an event that's happening in someone's life, contacted them, said they were getting ready to do a mortgage with this other group, and they told him what options they gave him, and this loan officer's like, do you mind if I run some scenarios past you? I mean, you're already down the road with this group, but I just want to open your eyes to some options. Come to find out, the scenario they're being presented was actually going to be detrimental over the next 30 years. And he showed him a scenario with the presentation you just saw that gave him over $4 million in net worth over 30 years. And so to your point, Jill, 100%, you have to put their goals in to be able to then advise. No goals, how can you advise, right? Unless somebody's like, short term, I need this done, I'm out of here, whatever, that's different. But if they're planning to be in the United States and they're planning to be a part of this community, they're going to want the best options for them financially. So I love this discussion, guys. What a wonderful discussion. Let's jump into this presentation one more time. Let's go back to it. Oh, am I not sharing my you guys see my screen or not yet?
No, not yet.
No. Oh, here we go. It's right here. I was on the wrong screen. Boom. Share and share. All right. So let's move on. This is a great one, okay? And look, we only have about 10 minutes, okay? And so keep populating. Jill, you've been very active. Kathy, thank you. Keep throwing things into chat. This makes for, look, we stopped the entire presentation to talk about what Jill asked. Like, that makes for a fun conversation. So don't stop asking questions. So why should lenders market reverse mortgages to Gen X's when the oldest Gen Xers are only 57 and can't qualify for one themselves? So Wendy, Tim, Suha, why should we be marketing reverse to these people?
Oh,
Who wants
man.
to take
Can everyone hear me?
Yeah.
See me?
Yeah, we can see you in
Yeah.
here.
Oh, I'm sorry, guys. I think we just got hit with that rolling blackout, and my Zoom is all working a little differently right now. You know, age, right? It's never too young to talk about retirement for a couple of reasons. One, you're going to be in that position sooner or later.
Right.
If
It's
you're a
bound to
Gen
happen.
X, you're not far from retirement. That 15, 20 years comes up fast. Secondly, you have family members, parents, aunts, uncles that are of older age. Be there for them. And thirdly, probably have kids, right? If the more educated you are, the more educated your kids are going to be. It's never early enough to think and learn. Reverse mortgages may not be applicable now, but you're going to know someone in your net worth that is. It's going to be a benefit for somebody.
I love that answer.
You know,
Just if we stopped right there, that's right. That's it for everyone in the audience. That's like enough. It's like, you're close enough. You're going to get there. Who do you know? Do you have kids? Are you taking care of people? Like, what a great reason to always bring this up to that audience. I love that. Go ahead, Wendy.
yeah, where I was gonna build on that is that, you know, we said before that Gen Xers are paying, you know, for parents. There is data around that, but even more importantly, this is one thing that I don't know about you. I am right there in the Gen X. My parents are retired. I have no desire to have their home and have to go through all that stuff there. And they want to be in their home on the lake. And I want them to have every single resource that they can stay there and age in place as long as they want to. That equity, if they need to use that or want to use that to have yard people, cleaning people, nursing, anything they need, I don't want that. And that doesn't mean that I won't inherit the home. That just means they can use their equity to live in a way that they deserve to live. And that's really why Gen Xers are there. And most Gen Xers are a lot like me. You know, I live across country from my family. You know, people have moved away from their home cohort. and you want to see them happy. You want to see them not, penny pinch and to be taken care of. And this is an easy way that I don't have to dip into my retirement plan to help. And they have the equity there. And it's a hard, conversation because parents, boomers, they were always told, pay off your mortgage, pay off your mortgage, pay off your mortgage. But when you let them know it's okay, this is tax-free money for you.
Yeah.
I want you to be happy. It has a light bulb moment for them. And the other part of this is with reverse mortgage lending. Reverse mortgage is a blanket term, meaning, you're leveraging your equity. HECMs are the specific FHA program at 62, but many reverse mortgage lenders offer what are called proprietary products now that a lot of people don't know about, where you might be 60. There's even some out there that are 55 and they're convertible. They're flexible. So you start as a traditional and it converts. There is so much out there in the market right now. And I've spent, most of my days consulting on this very topic. Is there's so much in the market that is exciting and helpful and can differentiate you that that's why you should be thinking about it.
And we'll give you guys Wendy's contact information. You all should reach out to Wendy and Suha about these things. And Wendy, if you have any links in general that you can post before this out or included in the video that we're going to send, to everyone, that would be great. Give people some resources because I think that's very important here. Okay, so we're getting towards the end here. What do you think? And I'll stop sharing my screen here. And Tim, I want to make sure that we get there's something that that BeSmartee is getting ready to offer. That's very important. That's tying in with reverse and conventional. I want you to mention that if you can, or just the concept of it. Let's talk about this, and then we'll mention a couple things from you, Tim. So what do you think the main reason why qualified borrowers choose not to tap into their equity? Let's talk about this. I don't know. Is this supposed to be a poll? I feel. Yep,
It is
perfect.
a poll. Yeah, it is a poll. It's
Let's
on
do
the
this
screen.
one quickly, audience. Let's do 30 seconds and then we'll just populate the answers and let's discuss this question. Go ahead, Suha, you were going to mention something.
I was going to say, because I remember Wilfred Brimley doing the reverse mortgage commercials. And I mean, the reputational risk, it had such a bad reputation when it first came out. And these are all reasons why people shy away from even talking to their customers about it. To me, it's astounding, as a Gen Xer with aging parents that didn't know that they had this as an option at all, for them to be able to age in place, as Wendy calls it, and live their life comfortably. Didn't know that existed, and wouldn't even have considered it because of all these fears that you see on the screen in this poll. So it's very interesting.
Beautiful. And let's get the results here, Nicole. And look, when we're talking about not tapping their equity, it's not just reverse, everyone. It's in general, right? Cash outs and HELOCs and all of that. A lot of people just don't want to do it. And let's see what the results were. So 39% said lack of awareness. I think that's a fair number there. Fear of predatory lending. Yep. And I think the millennials are actually lucky that they don't remember the 2008 part, right? It's like a good thing because we talked to some people and they're like, 2008, what happened in 2008? It's like, never mind. You don't want to know. Let's just keep going. Heirs won't receive as much inheritance. Okay. And then something else, please answer. Yeah. So please answer in chat. Let me see if anyone's gotten there. I almost lost the deal because I just asked my borrower if they were interested in reverse mortgage. I had no win back there. I had to win back their trust. Interesting, Janet. We might have to stay all over and address that specifically because that's a good one. Let's just take this. Let's just take this out. Let's just do this. Let's stop sharing. I think we have a few minutes left. I want to address Janet here in a second. Wendy, in our preview, and everyone, this is really important. In our rehearsal where we were talking, you had said there's no reason for people not to offer reverse. I think that's a great point. And so what I want to say about that is there are companies like BeSmartee, like Sales Boomerang, that are making it much easier now to offer that. where it used to be this sort of unicorn, unattainable thing that only a few people could figure out. Now it's a lot easier. At Sales Boomerang, we're literally telling you who in your database is qualified and could benefit. And BeSmartee is literally putting together a program to make it easier to get to that. So Tim, do you mind sharing some of that? And then let's talk about Janet's point and some donations as well.
Yeah, I'll make it quick. Conceptually, right? Most of us are forward loan officers. We're in the forward space. What we're working on is we're basically merging in forward and reverse. So as a consumer or loan officer for that matter is going through that application, it's going to catch on cues that will both produce a 1003 and a 1009 at the same time. And the logic will all run behind the scenes and merge in reverse products as an option if they want to see it, if they are eligible, right, based on their answers. It'll be automated. It'll reduce your work. What it'll essentially do, right, is to give you more options. So you have that conversation with the borrower, or in our model, just give it right to the borrower. They can see, well, I got my stuff I came here for. What's this reverse option look like? I didn't know it qualified for what. How the heck does that actually work? Right. So we're just blending it together in. There's no reason why it should be separate, at least from that initial point of contact. You might have separate departments that close a reverse mortgage, but at least when if you can power your primary channel and funnel to start identifying it in the point of sale, right? It's going to create the separation and give that extra data for further conversations.
I love that. I'm actually going to put this back on screen for just a minute because I want people to be able to get in touch with you, Tim, if they want to. And so Tim's information is right there. Wendy's information is there. Suha's information is there. I know people are going to have some questions. Make sure you reach out and ask questions. Two more things. Number one, this is a worthwhile webinar. We're donating and raising money for Ukraine. So please, there's a link in chat. Donate. And remember, it's ×4. Whatever you donate, we're going to match. And there's 4 different organizations that are going to match it. So please, every dollar is actually $4. Get it done, right? And then, of course, if you heard anything today that you're like, you know what, we do need to get better at presentations and getting people to trust us. We do need access to intelligence in our customer base. We do need a system that can help us prepare for the future, like what BeSmartee and what Tim is talking about. We're here, right? We're doing this to raise money, but we're raising awareness. And of course, we're looking to help the industry and everyone in it by utilizing the best tools and services. And we have some of the best here right now. So do not hesitate. Reach out to us. We are here and we want to help you. So everyone, thank you so much. This was fantastic. I know we're ending. And so Janet, if you're staying on for just a minute, I want to let everyone go that has to go. But Janet said, so was it Janet? Hold on, I think it was Janet, right? Janet said she almost lost the deal because she offered reverse. I'm a little lost. Look, Janet, could you expand for anyone that wants to stay on for a couple minutes? When you almost lost the deal, I'm assuming somebody felt like it was predatory. Is that what it was? Like you were harming them? I think she's jumping in. Yes. How could I turn? How do I turn on the mic? Great question. How do we? Nicole, if you can help us unlock Janet's mic, that would be great. Oh, sure. Go ahead, Janet. You're on now.
Can you hear me?
Yes, we can.
Okay. So I was working with these borrowers. They're 61 and 71, super, super sweet. I actually met them by working with a real estate agent at a home they were selling, and they just liked me. So they decided after they sold their home, they wanted to use me. And the co-borrower is very, very worried about making her monthly payment should something happen to her husband because he's 10 years older. And when I say worried, I mean extremely nervous about this. So I thought I was just being helpful by saying, have you considered a reverse mortgage? That way you don't have to worry about making the monthly payment if something should happen to your husband. And she immediately froze and she said, your company does those? And I said, yes, we do. And she said, I don't like those at all. I've heard of people losing their homes from reverse mortgages. She said, I'm going to have to go. I'll get back to you. 10 minutes later, she called me back and she said, we decided we're going to look elsewhere for our mortgage. And I was like, wow, that really backfired. But I was like,
That's the information, right, Janet? That's the misinformation that's out there. Go ahead. Sorry, I didn't mean to
exactly. And
interrupt.
I said, I was really, really, really just trying to be helpful. Like my company does them, but I would not even be the one doing it. Like, I'm not trying to do this to get your commission. I'm seriously just trying to help you. And I said, I'm still going to follow up with you from time to time to see how you're going with your home hunting, blah, blah, blah. But the next morning they called me back and said, we're going to stay with you.
Oh, there you go.
I talked to her husband and he said he decided he trusted me.
Oh, there you go.
But
That T word again.
it was a lesson learned. I will not use the word reverse mortgage again. I will use a different term.
Any
You know-
recommendations, Wendy?
Yeah, so this is the number one issue in reverse mortgage is the perception of this product. It's a sales and marketing problem, more so than it is a realistic loan product problem. So that's a different beast to tackle. One of the things that, going back to the pause of the sale, that I know some loan officers do, especially if they're more traditional in nature, is reiterate to them, I heard your concerns. Let me see, there's a lot of loan programs out there right now. Let me see what is available for you and come back with a presentation that shows what they asked for,
Yes.
but also shows the reverse. Janet, there was a study by the National Council of Aging a few years ago, and they basically did, so just to make you, like, to validate your experience as the norm, they put 500 participants in a room and showed them a HELOC and a HECM of HECM age. And they named it in one room, they named it reverse mortgage and a HELOC. And in the other room, they just called it an R mortgage and an R lock, something like, very generic, and just showed the benefits of both loans as they compared to each other. And when it was not named, 66% of the time, it was the chosen loan was the reverse mortgage. As soon as they named it, it dropped to the 30s. So names do matter. And so it's not like you're trying to do a bait and switch, but if you could show them the benefit statements, payments are optional, they're not mandatory, and show it with the benefits next to where it is, it can give more confidence. But my recommendation in that scenario is that you did a great job of actually how you came back with and said, yeah, my company does them. And then I've also heard of people saying, you're right. 20 years ago, the mortgage industry went through a disaster in 2008. Let's be real candid on that. And there's been regulatory changes everywhere, and there are regulatory changes to reverse mortgages too. In your particular situation, you could even personalize it. Say, the husband could have gotten a reverse mortgage and kept the wife completely off of it. And then, he passes away, or taxes come due and he hasn't been paying them, and you're kicked out, which in a traditional loan, you're going to get kicked out too. But kind of personalize it, but the regulations don't even allow that to happen anymore. So, but that's a challenge. That's definitely a challenge, Janet.
There's a good feedback.
Something I'm going to work on.
Well, Janet, there's a really good message here from Kathy. She said, call it a home equity conversion loan.
Yes, a HECM.
Yeah.
A
I
HECM.
just was,
But actually say
in
it
my
that
own
way. I think
brain,
it's
I
great.
just was thinking reverse mortgage. I knew that they were also called HECMs, but I just spit that out. But now I know not to do that again.
Yeah, that's really powerful. And again, to kind of go back to the conversation we were having earlier and the presentation that we were showing, and I'll bring it up on screen again. This is where you separate yourself from the decision. And a lot of people are like, oh, when you show something like this, you are separating yourself. You're like, this isn't my opinion anymore. This is just what's happening, and I want you to make a decision on this. And the beauty of this, using a digital presentation, is they take it with them, right? And it's not pieces of paper that get lost or can't understand it. It's a PDF. What am I supposed to look at? This is all designed and looks like a children's book. It's colorful, it's interactive, it's simple. And so the people looking at this can quickly go, all right, Janet, I see why you're making this advice now, right? Because some people are like, oh, but my payments are going to be so much higher on this 15-year. But you told me in the beginning, Mr. and Mrs. Borrower, that you want a great retirement. Like that is your goal. It's like, I don't want to work after 55, let's just say whatever that number is. This one gets you there the fastest. We can look at other options, right? And so all of a sudden you're separating yourself, and you can call it a home equity conversion loan, whatever you want to call it, but you let the presentation create the questions rather than
Right.
them going, what's in it for you, Janet? Why are you offering this to me? This must
Right.
be more money in your pocket, right? And to create that separation. So thank you
I
for
just want to
inspiring.
add, I was actually going to add one more thing, because I mean, reverse mortgages themselves are gaining significance in the industry as well. And I know that the Mortgage Bankers Association has actually created a new division to actually have advocacy around reverse mortgages. They put together an advisory group because they realize that the majority of people are getting into that age group where this becomes a real option for them. And we need to reverse that bad notion, bad reputation, as Wendy said, you know, the way it was 20 years ago. We need to educate about the seven regulations that have happened in the last 7 years, I think, right, Wendy? It's 7 and 7.
Yes.
You know, we need to educate about the name is just the name, but you need to look at what it affords you, what the option provides, and give that education to the consumer. So, I
Right.
mean, there's a lot of people who are working on that advocacy side of it as well.
Yeah,
Great.
the Age in Place Coalition is, you know, something that I, as my heart project, that educating borrowers and or educating really anybody in retirement, just the unbiased look. What are the benefits? It's not for everybody. It's the responsible use of home equity, and
Yes.
it's not for everybody. It's about being responsible. And there's a lot of misconceptions out there. And at the end of the day, it's going to be a wave of education, I think, that's going to happen in America. Some of it is out of necessity. I believe that there's a huge opportunity for the tech providers because this demographic uses computers.
Oh, yeah.
I mean, my mom banks online, like, so they're going to want to, when you don't understand something, there's two things going on with reverse mortgages. First is shame, because you were supposed to pay off your loan. Now,
Right.
why do I need it? So how do you overcome shame? You let them play with the financial tools of the loan. I think the consumer direct portion of tech has a lot of opportunity around building tools that consumers can play with their present value of money, and not taking the loan officer out of it, the loan officer coaching them through it. And again,
Right.
that trusted advisor. It's going to take time. There's the tech industry, I really believe is on the precipice and of really helping loan officers not just find the equity that's available, but position the benefit statements, because it really is about benefit statements. A HELOC can be frozen, a HECM can't be frozen, but if it's on a screen with a presentation, it's a million more times powerful than if it's over you saying it to them, Janet. That's just the
Right.
reality of it.
Well,
or
I'm
I
just
think
now
you said-
learning to do TCAs. Like I'm signed up and I'm working on them.
I think
It's a-
Janet,
yesterday during our review, Alex, you said something that was really important. There's 3 parts to that. It's the presentation, the notification, and then
Yes.
the sales tech tools that come with
Yes.
it. And those 3, like it's a trident that really brings it all together.
Right.
Yeah, no question. And Janet, I'm sure you're following Dave on YouTube and on in the Facebook channel. Just know we're constantly putting out new content about how to improve the presentation, make it easier, quicker. There's a way that now, in the past, it took 2 or 3 minutes to create one of these. Now you can create one in less than 30 seconds to get the conversation started. With the consumer, you give them the link and then they watch you build it in front of them, and it's magic. They're like,
Oh,
how are
wow.
you doing this?
That's
So
cool.
all that's available, Janet. So my personal information you saw on screen, send me a note. We can get you with your rep and really get you, we call them ninjas, become a ninja at Mortgage Coach. So everyone,
What
thank
was
you
your?
for staying
I
on.
don't have your information anymore. What was it?
Oh, I'll post it right here. It's here. I'll give everyone my email here, and you can reach out to me and I'll make sure that the right person connects with you. Awesome. Well, you guys stayed after much longer. A lot of people wanted to hear this conversation. Thank you so much, Walter. Thank you for the
Thank you.
for the feedback, and we'll see you all in the next one. Thank you for all your donations too.
Thanks, Alex,
Have
for
a good
doing
Thanks,
rest of
this.
your
everybody.
day.
Thank you, Alex, for hosting us.
Thank you, Alex.
My pleasure. Thank you all.